So moving averages can be awesome technical analysis tools that we can use for many different things like stop losses, entry and exit criteria, so on and so forth. But maybe you're not exactly sure what exactly a moving average is, or how to calculate a moving average, or even how to use it. So if you're brand new to investing and you're not exactly sure what to do with moving averages yet, stay tuned for this video. We're going to talk all about it, everything you need to know, and everything you need to do with moving averages. So let's get started. What's up everybody, I'm Clay, I'm here with VectorVest, and like I said before, we're going to be talking about moving averages in this video. Now, it's not going to be like a super in-depth look at moving averages, but we're definitely going to talk about the basics and what exactly they are and how you can use them. So first and foremost, there are two types of moving averages. We have simple moving averages, and we have weighted or exponential moving averages. Now, a simple moving average is very simple. It just takes a period of time, whatever you set. Let's say you have a 10-day moving average. It's going to take all 10 days, and let's say it's a moving average of the price. So it's going to take the last 10 days for the price of whatever security you're talking about, and it's going to average those out. So it's simply taking the 10 days and it's averaging them out. Now, why would we want to do this? Simple and moving averages are used to simplify the price and smooth the price pattern out. So we all know that the price can jump up, it can fall down, it can jump up, it can be really choppy. But when we have a moving average, it smooths this price pattern out. So it's almost like we have an average price that we can look at. And I use 10-day as an example. Of course, we can use any period of time. I know 200-day moving average is very common when we're talking about long-term trends. There's a 65-day moving average that a lot of people use. And if you're a short-term trader, a lot of people are using a 3-day and an 8-day, or a 3-period and an 8-period. So if you're trading on a minute chart, you would be using a 3 and an 8, and that would be a 3-minute and 8-minute moving average. So it's all based on whatever chart you're looking at, and whatever your candlesticks look like is what's going to determine the time period for your moving average. Now, an exponential moving average is slightly different, and it weights more heavily the more recent days. And of course, each one of these can be different, but as the time is more recent, these are more heavily weighted, and it's just a slightly different calculation that weights more heavily the more recent time period than the simple moving average would do so. So I said that you can use these for entry and exit criteria. Now, what would this look like? If you're using one moving average, let's just stick with the 10-day moving average to keep it easy. But let's say you're sticking with that 10-day moving average. Now, if price goes above the 10-day moving average, you could use this as an indicator to maybe enter the stock or get into that trade. And if the price moves below the 10-day moving average, you could use this as criteria to either short the position. I wouldn't recommend shorting if you're just getting into the market, but you could use this to short the position, or you could use it as a stop loss and an exit criteria to get out of your trade. So you enter the trade when the price crosses above the moving average, and you exit the trade when the price crosses below the moving average. Now, another way that you could use moving averages for entry and exit criteria is if you're using two different moving averages. So a couple minutes ago, I mentioned a 3 and an 8. This would be a 3-day and an 8-day moving average, of course, if we're looking at a daily chart. So we could enter the position if the 3-day crosses above the 8-day moving average. That would be an entry criteria. And we could also add on another thing, like if the price is above the 3-day and the 3 days above the 8-day, this is an entry. This is an entry point. Or we could do the exact opposite. If we're in the position, we could use the 3-day crossing below the 8-day to signal an exit criteria, or to signal an exit point. So with these different things in mind, these are a couple ways that you could use moving averages in your daily trading and in your daily investing criteria. Now it's important because, like we said before, price can be very volatile. It can spike up, it can spike down, but if we use the smoothness of the moving averages, it can kind of calm the market a little bit and kind of calm these things and take all the volatility and all of the, I want to say, noise out of the price pattern and out of that particular stock that you're looking at. And this can be used on indices as well as individual stocks. It can be used on industries or indexes or ETFs. It doesn't matter. Moving averages are available on whatever it is that you're looking at trading, and they're extremely simple to use, but they're very vital to your trading and your trading strategy. So they should definitely be something that you look more into and you get a little bit more comfortable with using. So a couple key takeaways are: we use moving averages to smooth out the price pattern. They can be excellent indicators on when to get into a stock, and perhaps more importantly, they can be excellent indicators on when to get out of a stock. So guys, if you found this video helpful, or maybe if you know a trader or investor who's just getting started in the market and they don't really understand what exactly a moving average is yet, make sure to share this video with them, and hopefully it can help them or help somebody you know just understand a little bit more about the market and what moving averages are and how we can use them. Now guys, if you did like this video, please don't forget to click that like button. If the subscribe button is red, I don't know why. Click it, join the VV Nation, and make sure you turn on the bell notifications so you never miss a video that we post. And as always guys, I hope that each and every one of you have an awesome day.